the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Intel. The shares, they pop as the company's turnaround effort gains momentum. We'll discuss with the CEO, Pat Gelsinger.
Plus, we'll continue with the earnings coverage as Amazon's results show a boost in its cloud computing unit. We'll break down those numbers.
And 1 year on since Elon Musk took over the company formerly known as Twitter, and the billionaire announces plans to take on the likes of YouTube, LinkedIn, and push into payments more. We'll discuss that and so much more throughout the hour. But first, let's check in on what is a rally to finish up the week. It's notable, though, we're seeing a rally across stocks and bonds, which are usually at odds, and that's even as we see those inflationary pressures build from a macro perspective. Certainly, consumers anticipated to see more inflation, so says UMich, the University of Michigan numbers, and indeed that all-important PCE number coming in strong. So we do, though, see tech on top. Is that all to do with earnings? We'll dig into it with you, Ed. NASDAQ up 1.2%, but still down on the week. I'm looking at the two-year yield, just pulling in. On the longer run, it's pulling in a little bit more. We're flat, but we're still above that 5% level. But is there like a risk aversion as we head towards the weekend amid, of course, ongoing geopolitical concerns, particularly with the Middle East? Bloomberg dollar index is actually off by 0.25% despite that inflation gauge. Let's have a little look at what's happening in terms of the world of Bitcoin, because over the last 5 days, it has been on a tear. We're up some 14%. Is this desire for a haven? Probably not. This is still more a focus, a hope, a prayer, a reality, Ed, that maybe an ETF in spot Bitcoin is coming soon.
Yeah, it's kind of like a broad risk on sentiment. And you talked about tech being on top, and earnings is kind of the driver of that. Intel gave a sales forecast for the current period that at the top end of the range was way above street expectations. And the story that they're trying to tell is that the PC market has bottomed out. PC chips are their biggest sort of volume sales, and that's been important. We will speak to Pat Gelsinger later in the show. One point in the session, where I'm pointing to over there, biggest jump on the stock since January of 2021. But it's also the third straight quarter where investors have looked at the story of Intel and said, yeah, we like it. We believe you that the turnaround's happening. That's what we're going to discuss. The other big name is Amazon. And with Amazon, right now, we paired some of the sessions gains. We were up a little more than that, but we're still up significantly. The story was actually beats across the board, apart from AWS in the top line relative to expectations. But if you look at the bottom line, the cloud unit brought in almost $1.5 billion of operating income more than the street was expecting. They've added customers in the quarter, and generative AI is what's going to be the driver of growth for AWS, the cash cow of Amazon's business for years to come. That's the story that Andy Jassy wanted to tell. Let's get more with Bloomberg's Poonam Goyal of Bloomberg Intelligence. That's the story, but what did the numbers tell you, Poonam?
The numbers actually looked really good. From a results perspective, 3Q was strong both for AWS and our mind. The 12% gain was in line with last quarter, and the retail business did much better than expected, which bodes well going into the all-important holiday season coming up.
So consumer looking more resilient. What was it that Andy Jassy was able to get across on the call, Poonam, that really steadied nerves around AWS and cloud in particular?
I think for AWS, the real important thing was his tone and the fact that he said that the deal books were good and that things weren't slowing any further. So it's like the trend is kind of just continuing to stabilize, which was very encouraging, and it was in contrast to what we heard from the other tech companies or cloud providers earlier. So I think that really was what took the stock up during the call, and I think that's what you're seeing today, just the confidence in the cloud business near term. And of course, for the longer term, we remain very optimistic on the cloud business, both on the margin side and the top line.
All right, Poonam Goyal of Bloomberg Intelligence, thank you very much. Caroline, some news crossing the Bloomberg terminal that I've broken with colleagues around the world in the last few minutes. AESC, which is a Japanese battery maker, has just closed a $1 billion Series B led by GIC, Singapore's wealth fund. But what I'm hearing from sources is that they're also working already on a Series C with their bankers and advisors that would value them in the billions of dollars. This is a battery company that makes the cells that go into EVs. It has deals with the likes of BMW and Mercedes here in the US, some of the automakers in the UK. But here's the next step that sources tell us: they're looking at a US IPO down the line as well. And it's interesting, it started life as a JV between Nissan and NEC back in 2007, but in 2018 a Chinese energy technology company called Envision bought a controlling stake, and Zhang Lei, who is the founder CEO of Envision, is also the chairman of AESC. So a lot of questions from investors and insiders about how that ownership and the Chinese relationships perceived, especially in the context of the IRA. Check that story out on Bloomberg.com.
Yeah, a great big scoop coming from you, Ed. I don't know where you find the time. Meanwhile, someone else is busy at the moment, and it's one Sam Bankman-Fried. He has taken a stand again today in the FTX fraud trial. Now, this time in front of a jury. Yesterday, of course, we understood that there was a focus where the judge is being allowed, in particular for Sam Bankman-Fried, to testify on FTX data retention before this jury. At the moment, he is currently discussing really the terms of service that were created. He says back in May of 2022, documents currently being displayed on the monitor actually in that particular court. He said he skimmed over a few times overall and that he went through parts of it in more detail when they were released. But his understanding was that this was referring to two different features on the platform. First, liquidation of user accounts, and second, clawbacks or socializing losses. Bankman-Fried is talking about. This is basically all about explaining how maybe funds were used, particularly when it comes in between Alameda Research, the hedge fund, and FTX.
Part of what he was trying to explain was kind of the role that FTX lawyers had in the lead up to the collapse. But, just drawing on my own experience as a parallel, I covered Trevor Milton, the Nikola founder's trial on securities fraud. And I raised that because Milton chose not to testify, or his lawyers advised him not to. It's highly unusual, not only that SBF is testifying, but he's actually going to do so twice. And put it all on the line on the stand. So we'll continue to cover that one, Karen.
And of course, no cameras inside the courtroom. That's why we're seeing so much drawing of all of this. But what's notable is we have got our reporters on the ground. We are getting a T-Live blog to you throughout. So go, of course, it's one of the most read stories on the Bloomberg terminal today. T-Live, if you're lucky enough to have a Bloomberg. But overall, just a blow-by-blow blogging account of really what's going on within that trial.
Welcome to our Bloomberg TV and radio audiences worldwide. Shares of Intel popping today as the chipmaker predicted a return to sales growth in the fourth quarter, fueled by a rebound in the personal computer market, but also a more competitive product lineup. Joining us now is Intel CEO Pat Gelsinger. And look, Pat, there was quite a long list of things that investors cheered, right? This is the third quarter where the markets basically said, Pat, we believe you on the turnaround story. But on your to-do list, where do you think you are and what do you think you have left to do on that turnaround story?
Yeah, thanks, Ed. And, overall, hey, it was a great, as we say, just a clean beat and raise on all the financial metrics. But even more important was the operational performance. And, as we said, hey, getting back to process leadership. And we, delivered key milestones. And we still have at least another year or two to go on getting that done. But major milestones, starting to deliver foundry customers. I promised one at the start of the year, and now we have 3 on our most advanced process technology, major packaging wins, and of course the product execution. Clean launch of the AI PC generation, but also the server business getting back to profitability ahead of schedule, and a little bit better performance there, and delivering the AI everywhere message with our accelerators, our server product line. So a really excellent quarter, and I'm just so grateful for the Intel team. It's been a journey, and we are clearly coming back.
Pat, you've talked to investors and indeed to Caroline and I about these new customers for the foundry business. When do we get names? When are you going to announce who these customers are?
Well, two things there, Ed. One is it's not generally the practice of the foundry industry for the foundry to be declaring their customer names. So one, it's not practice, and also many of the customers consider it confidential and part of their competitive advantage in how and what technologies they choose. So I can't promise names, but we're going to characterize them as best we can. And as we said, these are high performance and AI customers, and we've really seen the surge of interest in using the Intel technologies and foundry for different AI offerings in the marketplace. And that's both a wafer, but also a packaging. And this idea of advanced packaging, I mean, in addition to the 3 on the wafer side, we had 2 advanced packaging customers in AI, and that revenue materializes more rapidly, and 6 more in the pipeline. So overall, a really substantial quarter, and the AI space in particular has been the customers that have seen the most enthusiasm.
Let's talk about the AI space, because the running of AI models is where you see your future. It's not all just about the foundation models, it's actually the running of them, not just the building. But can you just relieve some of the anxiety coming from investors about a lack of clarity over data center future? And indeed, what is it that they need to hear from you? What more can you articulate that really makes it clear to them that you're going to be front and center in the AI race?
Yeah, thanks, Carolyn. And, really, first let's characterize what we're talking about, this idea of creating, these frontier or foundation models as is described versus using, right, and the training and the inferencing against those models. And I sort of compare it to like weather models. Not that many people generate weather models, but a lot of people use them. And that's how we think about this next phase of AI. How do we make this inferencing or the use of the models broadly available? And that's going to be, in the client, right? We talked about the AI PC. It's going to be at the edge, right, in retail and manufacturing and supply chains. But it's also going to be in on-premise data centers. And as we've said, instead of taking my data to the cloud, I want to bring the AI to my data center where the data is already. And finally, work in the cloud. And, for the data center proper, as your question talks about, hey, we knew we were going to lose some market share here, right? Those losses happened last year, and they're sort of playing out in the marketplace. But our roadmap is strong. And we executed in the quarter on our next gen, our Gen 4 product, that did a bit better than we thought in a lot of AI use cases in this area of inferencing. The next generation, Gen 5, we're already ramping that in production, and that's going to get announced in December. But next year's products, we're already seeing great health, and we're ahead of schedule on those, and those really improve our competitiveness. And the 25 products will go into fab in the first quarter of next year. So our whole roadmap and execution has really improved, and we start to see ourselves regaining market share in 24 in that area. And I think that will be sort of the final piece of the turnaround story when, the market sees, okay, data center is back strong, they're winning in the AI space. That'll be the end of the turnaround story, and people say, okay, they did it.
Well, going back to that building, that training of data, can you talk a little about Stability AI? Of course, you've got a deal to build their AI supercomputer. Was that them really going to you for ultimately what Gaudi can provide over what NVIDIA would? Or is it that you wanted to really be sort of offering them some carrots in the situation to be able to be helping with the training of the models?
Yeah, great question. And, now with Gaudi, we're now delivering performance and benchmarks that are as good as the best in the industry. So we've gotten our performance there. There was also some of this work that, the models were created and much of the software industry was working, on the NVIDIA platform. So we had to do some of the software work to get those running on the Gaudi platform. And they're looking for more cost-effective choices and ones that are supply chain available in the industry. And as we're ramping our Gaudi product line, we're getting that software work done. They're priced more competitively. Customers are saying, wow, I can do that work and do it at a much lower power performance envelope than the alternatives, and have a much more cost-effective model training and inferencing at scale. Okay, we're seeing a real surge of interest. And as I said, we doubled our pipeline of customers this quarter, and we, like others in the industry, are now supply chain constrained, and we're racing to catch up to that demand on our Gaudi product line.
For our Bloomberg radio and television audience worldwide, we're speaking to the CEO of Intel, Pat Gelsinger. Pat, the story of this week has been chip companies entering the PC processor market on ARM architecture. how do you hold off those newcomers? Attention, for example, on Apple this coming Monday, and they have done well in that domain.
Yeah, and I think the AI, PC as an exciting category. And this is one that we announced, we've been the first company on that, and we're now ramping our first generation AI PC products called the Core Ultra. So others are talking about what they might do in a year or 2 years. We're ramping products in the marketplace, today. We announced over 100 ISVs in our AI acceleration program, so they're coming on board. And before others have their products even shipping in the marketplace, we'll be launching our next generation, our Lunar Lake product, which we've already demonstrated for next year. And Panther Lake, our 25 product, we're sending that into fab on our leadership Intel 18A process technology in Q1. So I feel like we have a very strong roadmap. And hey, the idea of an ARM-based PC, they've always been sort of niche and low end, with the exception of Apple. And there it's not ARM, it's Apple and their ecosystem. So for the broader Windows ARM market, it's always been pretty low end, right, and insignificant in the bigger context. And as long as we deliver our roadmap, I feel very confident that as others surge into the AI PC space, this is a lift to the overall PC market, and we'll be uniquely positioned to benefit from that.
Pat, going back just a second to stability in the AI supercomputer, that's kind of in the assembled component domain. But are you saying, or are you able to confirm, that's a paid relationship where stability pays you for use of Gaudi?
Oh, yeah. This is a major customer, and we'll be building that with them, of course, working closely with them. But this is a paid customer relationship. We also see quite another set around our OEMs. We announced a major partnership with Dell, right, for not only Xeons, but also Gaudis as they come on-premise and their cloud offerings. We've seen a big upsurge in Gaudi interest in the Intel Developer Cloud. We had a 5x increase in the developers on our developer cloud, much of that on the Gaudi platform. And as I said, we saw well over $1 billion last quarter. We've approximately doubled that this quarter of Gaudi demand worldwide, and those are largely paid customer engagements. So overall, we're just seeing a surge of interest with Stability AI, Dell, and many others.
Pat, every earnings look to your forecast for the PC market, and you're slightly more positive than consensus in terms of literally how many PCs you think will ship around the world this year. I guess part of that is baked into your sales forecast for the current period as well. What gives you that confidence, and why is it that consumers will return to buying PCs?
Yeah, and there's probably three different factors there. One is I can say, hey, we gave this 270 million-ish PCs being sold through this year, and we said that early in the year. Many thought that we were too optimistic. Hey, we look at it today, and we're almost spot on with our accuracy on that forecast. Second, we've seen the industry, not just Intel, but the industry overall, inventory levels are now healthy. When we look at our sell-in rate versus sell-out rate, the product is selling through. I'd also say, hey, we're off to a good start in Q4. We're a couple of weeks into the quarter, and as I said on the earnings call, really good start to Q4 as well. And, seasonality is a bit above in Q4 historical levels. We also have things like Windows 10 end of service coming from Microsoft. Microsoft's about to release their Copilot products. But I'd say the sizzle in the marketplace is around this AI PC, broad new use cases for the PC. And I've compared it to the Centrino moment of 20 years ago when Centrino really ushered Wi-Fi at scale into the industry. And we think that's exactly what's going to happen with the AI PC. It will be a driver of new applications and use cases for the PC and bringing a bit more excitement, a bit acceleration, more users coming into the marketplace because it's going to give significant new capabilities to PC users.
Is that what gives you your gross margin level of 60% again? Is that where the confidence comes from?
Well, to get our overall gross margins up above 60%, I need the whole business to improve, Carolyn. Obviously, we're making good progress in the PC. I also need to improve my factory network. And as we get back to leadership, we finish this super aggressive 5 nodes in 4 years. I'm churning through capital very rapidly to get back to leadership. That's a big factor. Getting the data center business healthy, going back to one of your earlier questions, another factor in getting back to our margin structures. One of the other things we did this quarter was also have great operational success on our cost saving initiatives, and we said we would result in $3 billion savings. We've also cleaned up the company. I've exited 10 businesses since I've been here, and now we think we're finished with that phase, and we just get focused on growing the company again to the future. So part of it's growth, part of it's this focus areas across the businesses, and part of it's just increased operational discipline. But this quarter's results, we're well on our way to accomplishing that.
And you talk of operations there, and we didn't get time to talk about it, but we know that you do indeed have operations in Israel, and we think of your own employees and your infrastructure there at this time, Pat. So thank you very much for spending some time with us and walking us through your numbers. Intel CEO Pat Gelsinger there.
Time for Talking Tech. First up, Apple enthusiasts are getting ready for the company to reveal its latest iMacs and MacBook Pros. Bloomberg's reported the new computers will likely include the new M3 3nm processors. The product reveal will be Apple's last of 2023 this upcoming Monday. Plus, Huawei's Mate 60 smartphone breakthrough, driving sales for the company as profit doubles in the most recent quarter, adding to signs the Chinese tech leader is steadying a business rocked by US sanctions. And Elon Musk setting his sights on YouTube and LinkedIn. Ex-executives told staff at a company meeting they see the two sites as future competitors. Bloomberg reports says Musk is also planning to create a new service called X-Wire that would rival Cision's PR Newswire. An interesting one from us overnight, Kara.
Yeah, I mean, from you, Ed, overnight. And really, ultimately, this is coming down to wanting to be that global town hall, wanting still to be the place where you go to X for news in particular. I mean, really got a lot of convincing of business or corporates there to want to be filing their press releases, for example.
Yeah, there's a lot of battlegrounds. Remember, today is the 1-year anniversary of Musk closing the deal to take Twitter private, now X. And this was the first time Yacarina and Musk had done a joint all hands together, I'm told by sources. So some interesting data coming out of that one.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Look, we made it to the end of a mega week for mega cap tech earnings, and it's interesting to see holistically how the market looks right now. NASDAQ 100 on a 5-day basis, down for a second consecutive week, down 2%. We're up 1% in Friday's session. Amazon, a big part of the points mover to the upside, driving that. But on the whole, it's a kind of, we're waiting for the next two, Apple and Nvidia. Remember, Caro, that we went into this earnings season saying the big five are going to bring all of the EPS growth for the S&P 500. And if you took out those big five, the three of which reported this week, and then Nvidia and Apple to come, the S&P 500 would have an earnings growth decline or lack of growth, down around 5%. So we've been waiting, and there's more to come. Let's dig in on one specific name, which is Amazon, going gangbusters this Friday. We've got the perfect guest to talk about Amazon as well, and bring in Ayoko Yoshioka, portfolio manager at Wealth Enhancement Group. You heard my preamble on the big five tech names. What's your scorecard for the three that have gone so far?
Well, clearly Microsoft is a big winner during earnings season, but Amazon wasn't too shabby either. And it's really, the story of AI and the impact that AI is going to have going forward. Amazon did a great job on their conference call talking about the impact of AI and how that's going to add tens of billions of dollars of revenue for AWS, which was something that investors really like to hear.
What they don't like to hear, Ayoko, is consumer concern or macro concerns. And that was a business macro perspective that we got that led us down on the Meta front, for example, and maybe a little bit on Alphabet as well. What do you think about the resiliency of the macro picture for these tech names right now?
Sure. From a overall standpoint, all of these companies have just very strong balance sheets. And so, it's been a flight to quality to a certain degree for many investors who are concerned about the overall macro environment. Having companies that have high quality balance sheets, that have cash that is now generating, 5% plus, that's a huge relief for a lot of investors that they can rely on, despite the valuations being a little bit elevated, I think, in the near term.
And what we've seen over the course of this week is the idiosyncratic nature of big tech, some of them doing well on earnings and leading gauges higher, and then the macro perspective just pushing back, and over the course of the week, the NASDAQ is lower. Is AI, do you think, the silver lining necessary to allow these companies to continue to go up and to the right?
Absolutely. And I think one of the things that Andy Jassy highlighted on the Amazon call yesterday was just the impact of some of these AI technologies, whether it's Code Whisper for Amazon's AWS or Duet for Google and GitHub Copilot for Microsoft. All of these are going to produce productivity gains, just removing some of that repetitive code for developers. And I think that's going to be a big game changer and really speed up the acceleration of the changes and the impact that AI can bring across, not just for these three companies, but across the board for every company.
Ayako, it's hard to believe, but we're already basically in November. And Caroline and I have been thinking about the end of the year. We started the year with just mass layoffs across big tech and cutting back costs. How much of that is what's showing up now, particularly on the bottom line with tech, that all the pain that they went through, actually, it seems to have benefited them, at least financially?
Absolutely. It was, you heard all of these companies talking about cloud optimization, and that's really their customers sort of dialing back a little bit in terms of how much cloud usage they're going to have with these big providers. And, because of that, I think a lot of these, Microsoft, Meta, Amazon, they all pulled back on their own spend. And I think you saw them see the benefit of, the lower expenses, especially with Amazon. They talked about the lower headcount, in AWS and just, fewer engineers there. So I think that was a huge positive for them and continue to sort of strengthen their overall financial position.
It may seem premature, but I'm going to do it anyway. What does 2024 look like for big tech in your mind?
A lot of it is going to depend on the overall macro environment, but I think it is difficult to, slow down the impact of AI, and cloud is still relatively early in its journey. There's still workloads that need to migrate to the cloud, and it's just going to accelerate, I think, because of AI. 2024 will be determined by other factors other than just AI, but I think a lot of these companies can weather through that over the long term.
The reason why you're such a group voice to have on is not only how you're having to navigate what I think Wealth Enhancement Group has, thousands, 49,000 households of wealthy individuals that you're helping manage their money, but your relationship having built up all the research analysis and then moving into portfolio management, you've got a whole host of tech companies that you own, Ayako. And are there any that are overlooked, or how do you think about the Cathie Woods of this world that feel that NVIDIA's and some of the big cap names are just too obvious when it comes to the AI play?
Sure. I mean, we, like a lot of the sort of value-oriented tech names as well. Oracle's been in that space as well, and Oracle's been talked about. Their cloud evolution has really come a long way. And so there are other names outside of just the big mega cap tech that we like. Accenture is another name that we like in the space in technology. They have consultants who are going to help all of these companies adopt newer technologies like AI. And so, there are other technology names outside of just the big five that we constantly talk about.
It wouldn't be a week if we didn't speak Fed speak. And, for our global audience on Bloomberg Technology, just give your perspective on why rates and the Fed and the outlook for rates influences your decision about your allocation to technology names in a portfolio.
It's It's a great question, Ed. We get this a lot. And, why do we focus so much on the Fed and interest rates? And I go back to just sort of valuation 101, discounted cash flows. You have to use the risk-free rate, which tends to be the 10-year, right? So the 10-year Treasury rate, and what we see there is what's used in order to discount all of those long-term cash flows back to the present. And that's why there's such a huge focus on what the Fed will do and how the Treasury curve will react to Fed action. So yes, it is something that we continuously talk about, but it impacts not just tech valuations, but valuations across the board in equities as well as real estate and other markets.
Ayako, great to have some time with you. Ayako Yoshioka of Wealth Enhancement Group. We thank you coming to us from LA. Meanwhile, look, we're going to keep on talking about AI and indeed how machine learning can have kind of major impact on how companies and governments handle climate change questions. Sims Witherspoon, head of climate and sustainability over at Google DeepMind, spoke about it, the use cases in particular, but also its origins in gaming. Take a listen.
AlphaGo was a system that we developed that hopefully folks are familiar with, but games are a really interesting place to test AI because they have very clear goals, success metrics, clear benchmarks, and lots of data. And so that's the kind of system that is really interesting for AI because it's a perfect test bed. And one of the things that was really interesting about AlphaGo is that even though it's a game we've been playing for hundreds of years, using an AI system actually taught us new information that we didn't know about the game before. And we've really expanded this idea into other systems like AlphaFold, for instance. AlphaFold is a system that takes in amino acid sequences and tells us how proteins are folded. We developed a database that basically works like Google search for proteins, and we were able to give that to the research community in order to further their research. So if you look at kind of the development of systems like AlphaFold, you can see that some of the scientists that might use that would understand proteins, for instance, if they're engineering enzymes. We actually do work with a partner who is looking into enzymes that biodegrade plastics and are able to do their work more quickly because they have access to the library that AlphaFold provides.
DeepMind CEO is a big Atari fan, so more of the stories, let your kids play video games.
I mean, the answer to how do you go from AlphaGo to climate science is, well, you just go via, 200 million protein. Which is great. So, in the episode that you're in next month, we take a very global view because it's a global show. But we're here in the UK with our fantastic climate and weather. It's lovely today. So, can you tell us about something you've done here that you've seen and that is going to excite everybody?
Yeah, we'll talk about the weather, since the UK loves talking about especially rainfall, so maybe I'll go with that example. We did a partnership with the Met Office, particularly working with some of their expert meteorologists looking at heavy rainfall, because heavy rainfall is what causes damage to people and property. And so we developed a system that was a generative AI system, so effectively you can think about it, when you look at the weather and you see those, beautiful pictures on screen with lots of colors of like where rain is going to happen, like where it's going to be heavy, where it's going to be light, how it's going to move throughout the UK. And we basically fed that radar data to our system, and it watched it like a movie, effectively, and predicted the next frame. So we were able to, this is something we call precipitation nowcasting. So it's the forecasting for 2 hours ahead of time, so very short term for forecasting. And we worked with the Met Office to do this. They were an incredible partner because actually 99% of the country here in the UK is covered by the radar data.
That was Sims Witherspoon, climate and sustainability lead at Google DeepMind. Now, coming up here on Bloomberg Technology, IonQ's shift into commercialization is fully underway. We're going to talk to the CEO, Peter Chapman, about recent partnerships, some departures, and one roller coaster stock ride. This is Bloomberg Technology.
quantum computing company IonQ is placing some big bets on its shift into national security. IonQ is actually teaming up with the US Air Force Research Lab to develop and apply quantum systems. Now, this news comes in the wake of the co-founder, Chris Monroe's departure from the company. Now, all of this rattled the stock, and we want to really get clarity, the picture forward, with none other than, well, the CEO, Peter Chapman, who joins us now. And Peter, going back to basics, like, your aim at the company is to build the best quantum computers and basically solve some of the most complex tasks out of there. You came out of universities, out of the labs, into the real world. But your chief science officer is sort of going back into the labs, back into the research, back into the universities. And some analysts are saying, look, they're worried about the timing and the reasoning. Explain the timing and the reasoning for us.
Yeah, sure. So the company was co-founded by two college professors, originally from the University of Maryland and Duke, although both are today at Duke University. They, in Chris's case, he still teaches classes at Duke, and they run Duke's Quantum Lab, which is a significant undertaking unto itself. And we have a relationship with Duke University where the work that they do there, funded by the government, is exclusively licensed and royalty-free to the company. So Chris is going back to Duke University to lead that program, but the relationship between Duke and Chris is really it's not changed in any way, shape, or form. Chris would be the first one to tell you that the physics for what it is that we're doing was solved long ago. If you go back and listen to Chris, from several years ago, you will find tapes where he says exactly that. Where the company is today is no longer about academic research. It's not about fundamental physics. And that's actually quite a difference between IonQ and many of our kind of competitors. They're still working on fundamental physics. Sometimes, yes. And we're not. We're actually migrating out of an academic phase and now into an engineering and product phase. And so we're in the middle of that transition.
Peter, one of the analysts that Caroline referenced was Benchmark's David Williams, and he basically says that the timing and motivation of Chris's departure is curious. Just on the timing part, could you just explain why now? Why the process that you just outlined is being announced this week?
Well, I think, I'm not sure I'd want to speak for Chris, but I think there's a number of likely factors. One is he did state that he wants to go back to his academic roots. He seems to enjoy that, and that's exactly what it is that he's doing. The other aspects, just in terms, I think, the companies often outgrow their founders. We're at a place today where it's no longer an academic endeavor. It really is a engineering and product-based endeavor. And I think that Chris felt that his skill set is better in the academic side of it.
So let's talk about the application of the technology now. Peter, where do you feel the reward of your investors start to push in on? We were just talking about applications in national security, for example.
Yep. So we're just on the verge of, we just announced just recently a new system, which is going to have enough, we call them algorithmic qubits, 64 algorithmic qubits. And this will allow you to explore a computational space of 2 to the 64 in parallel. And so 2 to the 64 is 18 quintillion different possibilities, states, in a single instruction in a fraction of a second, similar to the instruction speeds you have on your laptop. This will allow now applications to be developed which can take on the world's largest supercomputers. Quantum is not good for everything. It's strangely has a tough time adding 1 + 1, and at the same time maybe is good for solving differential equations. In terms of applications that we have seen so far, machine learning is certainly one area where quantum seems to have a huge advantage. My guess would be that strong AI will be another area. The original premise of quantum is that exploring the natural world, which is not digital, it's not analog, it's quantum, is that you need a quantum computer to be able to model Mother Nature. So, it has been thought that at about 96 good enough qubits, algorithmic qubits, you could model the photosynthesis and be able to unlock how plants can turn sunlight into energy. And that would produce a next generation of solar cells that would be 4 times more efficient than what they are today.
Peter, much of our global audience does think in floating point operations per second that are just unimaginable to the human brain. But just quickly, in a layman's perspective, explain what's proprietary about your technology, quickly.
So what we do is we use atomic clocks. I actually have one of them here. And it's a chip which is sitting in a little vacuum chamber. And it's using 32 to 64 atoms. And it uses those atoms for computation. And what's unusual about it is that it can run at room temperature. We're down at 0.02 nanometers. So, the standard silicon at 7 nanometers is way up from where we are. And we use light to program the atoms. We shine little lasers onto these atoms and put a spin on them and entangle them to be able to do the computation.
All right, Peter Chapman, CEO of IonQ, thank you very much for your time.
It's official. Taylor Swift is a billionaire.
Welcome to the Eras Tour.
Her Eras Tour alone is a party, generating hundreds of millions of dollars. It's a multinational conglomerate with the world's most devoted customer base and an ultra-charismatic CEO. Swift has made her fortune almost exclusively from her music. Bloomberg estimates Swift has made $125 million over the years from record sales.
We estimate that her total income from streaming is $175 million.
The biggest part of her earnings is undoubtedly her concert revenue.
We estimate that Taylor nets about 35% of the ticket sales as profit, about $500 million from touring over the years.
Her tours, her record sales, and streaming royalties are all earnings, but she also has assets, including her recording catalog.
We estimate that her catalog is worth about $400 million.
Then, of course, there's her actual property.
That includes a condo and an estate in Nashville, an estate in Los Angeles, a large apartment in Tribeca in New York City, as well as a summer house in Rhode Island. The total value of her properties is about $110 million.
Subtract her expenses, taxes, staff costs, and so on, and you get a net worth of $1.1 billion.
Some reporting from the Bloomberg Big Take team there on Swift's influence, reach and wealth. And Karen, never in her wildest dreams would she probably think she'd be where she is now.
Well, never know. She might have thought that from a very young age, Ed. Big ambitions. But what's interesting is, well, maybe her success isn't always paying off completely to Universal Music Group. Of course, she is their biggest seller in terms of artists. But actually, their numbers came out, Amsterdam-based company, and actually underwhelmed. They saw a lot of growth, but did miss analyst estimates overall. But Midnight Album, the release, was the biggest impact. And indeed, perhaps she's outperformed too much in previous years. And that's it from Bloomberg Technology.
Check out the podcast wherever you get your podcasts. From SF in New York, this is Bloomberg Technology.